Hello, everyone, and welcome back to another episode of Tax Thursday presented by Smart Counsel. I'm your host, DDQ, here with Smart Counsel's tax resident attorney, Dion Kellier. Happy
Hello.
Tax Thursday, Dion.
Happy Tax Thursday, Dee Dee.
If you are new here, Smart Counsel is a woman owned, minority owned boutique law firm. Please visit our website at www.smart-counsel.com to learn more about our attorneys and our practice areas. For today's episode, we will be diving into reporting cash wages to the IRS. So, Dion, my first question, cash wages are pretty much getting paid in cash. Is that right?
Getting paid in cash. And it's not illegal unless you're trying to hide it from the IRS. So let's start with the IRS says that unreported income is a huge deal to the IRS. And the agency recently estimated that the U.S. loses hundreds of billions of dollars per year in taxes due to unreported income. Considering the amount of lost revenue, it's not surprising that the IRS has a process for determining unreported income. And when it suspects a taxpayer is failing to report a significant amount of income, it typically conducts a face-to-face examination, also called a field audit. And they look at the taxpayer's specific situation to determine whether all income is going to be reported. So what brings you on the radar? Well, actually, let's talk about what even made this topic come up. It came up because there are so many people that get paid in cash. And, if you're a regular employee and you get a check, your W-2 or not even your W-2, because that's at the end of the year, but your check itself, say you made $1,000, but your gross will be 1,000, but your net won't be 1,000 because they have to take out your federal withholding, your Social Security, your Medicare. But when you get paid in taxes, when you get paid in cash, these things are not taken out of the check, even though you still have the obligation to pay these things. And so if you are working for someone who's paying you in cash, they are responsible for half and you are responsible for half. But if you are self-employed, then you are responsible for the entire, both sides of it. So that's how it kind of came up. I know a lot of people that get paid in cash legitimately, right? I know a lot of hairstylists. I know a lot of barbers. I know people that do landscaping, babysitters, those people that have those gladiator classes, like all of those. So this is why I found it very important. So how does the IRS, how do you get into their crosshairs, right? And they're like, wait a minute, this person, is a bartender but yet they're not reporting income, right? So there's a couple of ways. There's a T account analysis. And this is the method that the IRS used to convict Al Capone of tax fraud. And it's a procedure where the IRS compares sources of cash on the left and then the cash that you spend on the right. And it's basically like budgeting, but they're trying to determine if you have sufficient funds to live your life, right? And so that's what it is. So if you're saying I make $0, but yet, your monthly bills are $10,000, then guess what that means? You're at least making $10,000 a month because you can't get negative money, right? So that's how it happens. And I'll say this, once you get in the IRS's crosshairs, you just kind of wait for the analysis. If you can back yourself out, you can back yourself out. But once you get into their crosshairs, just you have to deal with whatever they say. But if you watch this video today and you start tracking your stuff going forward, then possibly you won't even have this problem. And if you did have this problem with the IRS, you kind of have a way to recreate it, right? Because if you've kind of been in the same industry for the last 3 years, 5 years, then you maybe in the first year, you didn't make that much, but now you know that you're making 10 times what you made in the first year. So maybe that's the way that you can recreate. Because as with the marijuana industry, violating 280E, all the IRS has to do is make the assertion that you are deficient in your tax obligations. It is up to you, the taxpayer, to then, be like, wait a minute, you have to refute their assertion with facts, where they just have to say that you didn't report your $120,000. They don't necessarily have to tell you how they recreated it until you do the audit. And by that time, it's too late. So they do the T account analysis, which is balancing the budget. They also do a bank deposit analysis, because the IRS can do a notice or a request for production to your bank. And they have to, it's a government agency. So they have to abide by it. They don't have to get your permission to give the IRS any of your information.
That's crazy. So with all this like cash payments, does that include tipping as well?
Absolutely. We're going to get into tipping, but just so we start here, if you make more than $20 a month in tips, you need to report it. So
Wow, really?
$20, yes. Threshold is very low. So what, 20 times,
Yeah.
so what is that? $240 a year in tips, then you have to report it to the IRS so that it's not free money. So, okay, we're going to go to
Interesting.
okay, so another way that they know that you're not being forthcoming, they're going to do a website and e-commerce analysis. They're going to give you a statement to talk about your information not matching, and then for you to refute it, and then they're going to do business financial ratios, right? So the bottom line, the one thing I want you to take away from this, if you are a cash worker, keep good records. I love spreadsheets, right? A spreadsheet always works for me. So like, if you don't get paid in like Zelle or Cash App, or something where you can track it, then you track it. So like every Friday, just track the amount of money that you've received and the sources that you received it from, because there are obligations on the side of the person paying you, that if they pay you more than $600 a year, then they need to give you a 1099. Does it always happen? No, it doesn't always happen. 1099s are self-reporting. But if I say that I paid you $600 and you say that you got, whatever money you got for the year didn't include that $600, then you just opened yourself up for an audit, not necessarily me. Because if I'm paying you, it's an expense, and the IRS is not going to, track me down for my expenses. So, just so you know that. So, what are the employer obligations? So, let's start here. Getting paid in cash is not illegal, all right? So, for the employers, all wages must be reported, taxed, and declared as income, and this includes federal income taxes, Medicare taxes, Social Security, and state income taxes where applicable. Paying employees under the table can result in steep fines or even jail, and I'm going to talk about the difference between paying in cash and paying under the table, because it's two different things.
Yeah.
So that the employer should not use paying in cash as a way to avoid taxes, because it gives unplanned liability to the employers and the employees. And if you are paying in cash, you have to withhold the taxes correctly and you have to report them correctly. So, it might be easier, even if you are a cash-based business, to then get a system like, I use ADP, but ADP or Paychecks or anything, there's smaller ones like that. So you deposit that cash that you're receiving into either Paychecks or ADP. While it may be a little bit pricey on the front end, on the back end it saves you so much headache. So
Sure.
let's see, the IRS requires the employers to withhold and transfer income and employment taxes on all wages paid, even taxable tips. You're required to report these transfers and the total wages, tips, and other compensation paid to employees. States have the similar requirements, and withholding taxes correctly keeps you compliant with federal and state laws, and it's a part of a way of keeping correct documentation about your employees. And if you don't correctly track it, when it's time for your employees to collect Social Security, it becomes a problem. But we'll get to that in a second. Records of things like when employees receive pay, how gross pay was computed, and how much was withheld is important for your own records. And while the employers that are correctly reporting their cash wages, they now also have an obligation. If they paid somebody $1,000 in cash, whatever it is that they're supposed to withhold, they need to remit that to the IRS or to your state Department of Revenue. And if you don't do that, it's a trust fund violation. Called a trust fund because you're holding these funds in trust of the state or of the federal government, and you are remitting it to them. That is one of those things that pierce the corporate veil. So if you have a corporation, for instance, and you are paying people in cash or paying them regularly with a W-2, and you're taking the taxes out, and then the taxes that you're taking out you are not remitting to the IRS or to your state Department of Revenue, then even if the business closes, the IRS could go after you personally for that. That's one of those things that survives. So
Wow.
yeah, super important.
So how would you kind of like plan for that, like to kind of like not have that happen?
So if you're paying in cash and you're budgeting, I would say get a system like QuickBooks, right? So at least determine what the paycheck would be and what taxes should be taken out of it. So you'll always have a report and you'll always have something to go back to. And then, so if you're paying them $1,000 in cash and say that the taxes amounted to, $200, make it easy. So you give them $800, and then of that $200, 100 goes to a federal withholding, 50 goes to Social Security, and 50 goes to Medicare. Like, you keep your records. So as important as it is for the employee to keep records, it is vital for the employer to keep records, because this determines. So right now, today, it doesn't matter. It seems like it doesn't matter.
Right.
But in 50 years, when this worker is going to collect Social Security, I don't know, like, if you don't show that they've gotten paid, like, I think Social Security takes, I want to say it's your best 3 years, and that's how they determine what your benefit is going to be. So if they don't have that record, right, say somebody was a landscaper their whole life, made good money, did great stuff, they did everything that they were supposed to do on their end, and they report whatever to Social Security, then if it doesn't match with what the employer reported or should have reported, and say the employer is dead or whatever, then you kind of have no recourse if nobody was keeping any records of what was happening, because they're not going to just take your word for it.
Even if the employee kept track.
Yeah, you could keep track. Yeah, it's a better argument. Would I take a case like that? I don't know. It depends on the level of information, and it depends on if it could be tracked. What I would probably start with in that situation is, I would start with, like, okay, what kind of records do you have? So do you show that for every $1,000 you got paid, your company kept 200? Because then that's going to be your argument for the IRS to go after them personally. And if the IRS goes after them personally and Social Security, for instance, is made whole, then you may be able to get a better benefit, but we just don't know.
Great. Wow. Okay.
Fun,
very complicated.
Right.
Yeah.
So, okay. So now, it's legal to pay your employees in cash, so as long as you withhold payroll taxes correctly and keep thorough documentation of hours worked and wages earned by employees. But business owners who pay in cash, they have to be scrupulous, and even with the best intentions, it could be miscalculated. So that's why it's kind of always better to pay them in some sort of check situation. And if you get audited and the IRS discovers that you misclassified workers, you didn't declare income, you underpaid taxes, you, the employer, will be fully responsible for your employees' taxes, penalties, and interest, and your workers suffer too, because they may not have access to disability or unemployment insurance if payroll records show that their wages were misreported. So this is how the numbers work. As the employer, you are responsible for calculating and deducting all your employees' taxes. So if it's Social Security, if you have an employee, it's an employee-employer situation, the employer is responsible for 6.2% of taking out 6.2% out of each check for Social Security. If you're self-employed, though, you're responsible for the whole thing. So you'd be responsible for 12.4% for Social Security. Now for Medicare, if it's an employer-employee relationship, the employer is responsible for paying 1.45%, and the employee is responsible for paying the other 1.45%. If you're self-employed, you're responsible for 2.90%, right? It's just the full number. And then for federal taxes, it's based off of where you fall in your tax brackets, right? So the employer is supposed to take it out of your check, but if they don't take it out of your check and then everybody gets audited, the employer is going to be the one that has to remit it to the IRS, because as the employee, you're not in the position to tell your employer to not take this money out of your check.
Right. Would there be a reason why they wouldn't do that? Is that just kind of like they're trying to be sneaky, or that there's like a mistake, they're just not doing it right?
Yeah, it's paying under the table. It's people, I mean, like, at the end of the day, it's paying under the table, right? And nobody thinks it's a crime until they get caught, and then they get caught, everybody's like, but like, you're not paying taxes, you're not declaring it, they know they're not declaring it, and now everybody gets caught. And I'll say this, like, one thing that I know, one thing's for certain, two things for sure: any exception that you make, anybody somebody that you make the exception for, like, ooh, I'm going to pay him under the table. We're great. We have a great relationship, XYZ. Those are the first people to get audited, right? Because somebody gets upset in the situation and they're going to be the first ones to go and, blow up the whole situation. So it's always my recommendation to always stay within the confines of the law.
All right. So to kind of differentiate between paid under the table and paid in cash. Paid under the table is pretty much paying in cash, but you're not withholding anything. You're just giving cash, and no one is reporting it to the IRS. Is
Yeah,
my understanding correct?
it's not withholding and it's not tracking. So like somebody works for
Okay.
you for, so it's like this. You do a job with someone from Monday through Friday. They're not tracking hours, you're not tracking hours, right? Then on Friday at 5 when the job is done. So now you know that you told them to be there at 9 and you told them that they can leave at 5. But now on Friday at 5, you give them, you give them $2,500, right? So it'll be $500 a day. And you just give it to them in cash and they go about their business and you go about your business. That's paying under the table. But same scenario. I work with you 9 to 5, $500 a day. But on Friday, when I get my wages, it's $2,000. Say that's the number. And it's $2,000 because of the $500 that I did not get. It accounted for the employee and employer portions of the Social Security and of the Medicare and then federal withholding that the employer is then putting into an account and then making their 941 payments, because the employer taxes, trust fund stuff it's a 941 situation.
Okay, that makes sense. So if with like the initial example that you gave, someone does a job and they just pay them $2,500 for 5 days. They both walk their own separate ways. No one reports it. That's illegal.
Correct.
Does it matter what the amount is? Like if I just paid like a kid $20 or something?
Well, that's different, right? So if you paid a kid $20 to mow your lawn, I mean, they should track it anyways, right? Because you're gonna want to know how much you made at the end of the day. But the numbers are, so if you pay somebody over 600, then you need to give them a 1099. They can be self-employed. They can be an independent contractor, so you don't have to take any taxes out and have them be fully responsible. You just need to let the IRS know that I paid this person $1,000 and I gave them a 1099. So now the employer did what they were supposed to do, and now that it's on the employee. But if you are in a situation where, as far as the employee and you're considered an employee and you make over $400, then taxes need to be taken out of that check.
And that amount is per year?
Per year.
Or per month?
Per year.
Per year, okay.
And to make so $20 a month. So when we were doing the wages situation, $20 a month is $240. So if you make $50 a month in tips or $50 a month in whatever, you're already going over that threshold. So I'll give tips for employers, and then we're going to move to employees. So for employers, you should calculate and withhold payroll taxes and deductions carefully. You should be diligent about tracking hours, pay employees on a regular schedule, open a bank account specifically for payroll, have the employees sign that they received their pay, create an arsenal of payroll records and store them, monitor how much your payroll amounts to, and observe payroll laws. So the types of jobs that typically are cash types of businesses are various self-employment, such as home repair, plumbing, cleaning, window cleaning, contractual work, farm or construction work, transportation services like taxi and pedicabs, seasonal workers for pop-up events and markets, day laborers, or short-term family and teen employment. None of those are illegal. It's just how you track the payment. Babysitting is also one, bartending, and we know we can name 1,000 things that people are paid in cash, and there's nothing illegal about what they do. And also something to keep in mind, and this has this affects the marijuana industry, but it affects every industry. If you are paid more than $10,000 in cash, and the $10,000, if you break it up, like say you give $2,500, but it is all connected to the same transaction, then you need to file a form 8200 and report to the IRS like who received the payment, and like who the recipient is, who the payer is. Like there's so you need to fill it out. So if you pay somebody $10,001 and you think it's going to be under the table, it's absolutely not. So that's that situation. So let's see. If you are in for last year, and I know this is going to change for this tax season, but if you make more than $12,200, you have to file a tax return. Doesn't mean you don't. So doesn't at other times you are able to report your taxes, and especially if you want to get a refund. But single filers under the age of 65 have to file a tax return when their gross income exceeds 12,200. It's probably like 12,500 right now. And if you are 65 or older, if your income exceeds 13,000. So a lot of people with their Medicare, their Social Security benefits, if it doesn't equal that, they don't have to file tax returns. If you are a married couple filing separately, income over $5 has to be reported, regardless of age. So married filing separately. But if you're married filing jointly, 24,400. I know the number has gone up. Head of household, they have to earn over 18,350, and there's no exceptions to this. So let's see, blah, blah, blah. Your employer or contract provider must keep track of all the amounts they pay over the course of the year. You get a 1099 if you make over $600. You get a 1099 miscellaneous if you're working for someone. You're an independent contractor, but it's like so a 1099 NEC is for independent contractors that you have working for you that like work on a continuous basis. But if you have an employer and you decided to be an independent contractor for them, they give you a 1099 miscellaneous. Or not even necessarily an employer, but if you're self-employed and like say that I do a job for somebody and I charge them $1,000, that person will give me a 1099 miscellaneous. But like say that I go to a particular place every single day and I'm an independent contractor, then I'd get a 1099 NEC. Let's see what else. For tips, anybody who receives over $20 a month, they have to report those tips. You have to carefully track all your income. Keep a spreadsheet. Keep a spreadsheet. Best thing ever. Go ahead. I know I was just rambling.
No, like that's just like the most interesting thing to me with this topic is like tipping, because at least like when you like are a waitress or a waiter, maybe like a barista, how do you really track and report that if these tips are just coming from customers, or it's not really like the restaurant itself, or is it classified as a restaurant itself? How does that really work?
So if you work for a restaurant and basically most of your wages are based off of tips, right? Because most people that work at restaurants, they don't make a living wage. They are supplemented in tips. If the restaurant that you're working at says nothing about tracking your tips, probably they're doing things under the table, because any established restaurant any establishment that is working within the confines of the law knows that once you hit a certain amount of tips, then you need to report it and it needs to be tracked. And so the fact that it's coming from the customers and not the restaurant, it's still by virtue of your employment.
Oh, okay. Okay, that makes sense. So the business or the establishment would let their employees know that, hey, you need to track this. Like if you're a bud tender, or
you have to, yeah, exactly. So like this, right? Say you're a bud tender and you're an employee. So you're going to get a W-2 check that says I made, $36,000 a year being a bud tender. But then also, since that particular business works with tips, then they're also going to file a 1099 miscellaneous that's going to calculate how much tips they had for the year. So I know, like in situations at restaurants, like I think at the end of the night, everybody puts their tips together and then they give like 10% to the busboys. I'm just guessing the numbers, but they give like 10% to, the people that are not at your table talking to you. But if they weren't there, you wouldn't get a tip, right? Because who's going to clean off the tables? Who's going to, pick up the food? Who's going to whatever? So like, even if in the jar, there's $100 at the night, we'll say $1,000 of the night, the particular bartender is not getting $1,000. They may walk away with like 700. I'm just guessing. And then the other 300 is split. And so each person has to account for their tips. And I know that a lot of places, you have to like declare your tips when you're leaving. So if you're declaring your tips, then, the restaurant is kind of keeping a record, the restaurant, the establishment or whatever, because like you think about going out, bottle girls, like they can't leave until everybody calculates what they made for tips. Right. And that's only because people got in so much trouble that they're like, okay, this is our, this is our checks and balances. Is everybody always honest? No, but that's any business. Right. So yeah. So my like number one advice is to always keep track of your own income. And if you are an employer, keep track of your business, right? And so if you are an employer and your business has tips, I would create a situation where everybody has to declare their tips at the end of the night. So you know that on October 14th, we got 14,000 in tips, and Susie got 2,000, Jack got 2,000, Mary got 5,000, whatever it is. So you have your checks and balances in place, because you don't want to be responsible for paying somebody else's their taxes, because they're definitely going to come with interest and penalties, and there's nothing that you can do about it other than pay it.
So it's like sometimes, coming in naive, I guess you can say, you think that, getting paid in cash or getting tips in cash is kind of like, moving around the system, you're getting away with something in a way,
Right.
But I feel like it's so much easier to do it with like electronically, almost with like that paycheck that you do get, or if it's just like a direct deposit where the employee is handling things. I feel like that just is so much less stress especially on the employee.
I agree with you. I feel like it's less stress on both, right? Because like when you're 17, you don't care about keeping good records.
Exactly.
Right? Not until you get a little bit older and you see people who have gotten hit by the IRS. You're like, oh, I want no parts of that. I declare things that, for me, my rule of thumb is like anything over, my clients may not necessarily give me 1099s, but when I do my taxes at the end of the year, I separate my W-2 income, and then I separate what my self-employment income is, and then when I separate my self-employment income, I then separate it by source, just in case the IRS comes back and says like, hey, this place said they paid you $600, and like I have the track of, did they pay me $600? No, they actually paid me $450. They probably were supposed to pay me $600 and they didn't, but like that. I keep those records, and I've kind of always been like that, even before I did my tax stuff, just because like I know that when the IRS comes knocking, there's nothing that you can do. You could call me, of course, I can make it easier, but they're knocking. When they're knocking, they're knocking.
Yeah, no, for sure. So the takeaway from today's topic is to track everything, no matter how you're getting paid. If you're an employee, if you're an employer, spreadsheets can be your best friend.
Right.
Anything else that?
So if they have tips, there's softwares for tips, but I don't necessarily. I don't have one that I would recommend, or that I would say don't use. I don't know. So I would say for whatever you use, a spreadsheet. To me, a spreadsheet is the best. I track everything in spreadsheets because you can do your calculations, you can have formulas in there, and like I just track everything in spreadsheets. So that would be my recommendation. It's nice and free. All you have to do is go on Excel and then create your spreadsheet, create your formulas, and then just follow that. Let's see. So if you have any household employees, you have to report more than $2,400 worth of payments to them. All income has to be claimed on, some sort of, the IRS wants to know, right? If there's anything that you could take from me at any point in any of these conversations, is that the IRS needs their cut.
Yep.
And that's just that. It is going to be what it's going to be. We can be mad about it. We can whatever. But then, how we have roads and infrastructure and, certain things. So, I guess, bothersome as it could be to track these things, it is created for the good of all of us.
Right. Right. No, for sure. If you guys have any other questions or concerns in regards to this topic, feel free to DM us on Instagram, or you can shoot us an email at attorney@smart-counsel.com. Before we sign off, do you have any last words, any last advice before we?
No, other than it's not illegal to get paid in cash. It is very, very, very legal. But, if you are in a situation where your employer is paying you under the table, when the IRS comes knocking, there's no friends in this, right? So everybody's going to go
Yeah.
down. So if you guys just keep it right from the beginning, then you don't have to worry about it.
Every man for himself, or woman for herself.
Exactly.
Well, thank you so much. This was another fun topic. I think a lot of us don't know about this. Like I said, we kind of go into these situations thinking that we're getting away with something, but the IRS always needs their cut. They'll find a way to get it. So it's better to be prepared. If you have any feedback or topics that you want to see us cover here on Tax Thursdays, again, just contact us and make sure that you like this video and you subscribe to our channel. But until next time, we will see you guys next Thursday for another new episode of Tax Thursday. So thank you.